Hey traders, I've just entered the EURUSD short. Okay, so with this trade in particular, let me just break it down for you guys. Now, I'm short. Let me just show you exactly why. So recently, if you look at the daily time frame, we had a huge meltdown. Okay, I was expecting this candle to hold because this was after non-farm payroll, after daily support, and I was expecting it to maybe go long. However, Monday's candle, boom, shooting star, bearish engulfing, we broke straight through the support and we actually landed bang on 1.0975 weekly support. So with that being said, the moving averages are down on the daily. If you look at the weekly close as well, the weekly candle was extremely bearish and the MAs have actually crossed back over as well. So this candlestick in particular, I wouldn't really want to go long against that unless we see some kind of nice reversal pattern or formation at the lows there. So my bearish for this, my bias, sorry, is bearish. Now what we've actually seen is today is Tuesday and it is currently 20 to 9 a.m. London session. We've seen a little bit of a movement to the upside around 50-60 pips yesterday, and I took my Fibonacci more or less on the hourly/2-hour time frame over here. So you can see I've gone from A down to B, because if you look at the prior movement on the euro, it was very bearish. That was one retracement we had. This is the next retracement we had. So A, B, C. As you can see, C retracement 1.1021 and 1, 2, 3, 4, 5 candles where we actually couldn't sustain a bodily close above that. I'm already in this trade. Okay. If you wanted to wait, we could actually wait for the counter trend line break in order to short upon a break and close below. I'm actually short after this candlestick right here, the green one. Okay. Now, this is the risk reward setup on the euro. So we go short, the close of the green candle. My stop loss is 20 pips above the high wick. So the high wick is 26. My stop loss is 46. My target on this one, I'm going to actually go down to the daily area of support, just shy of the secondary Fibonacci. We should hit 1.0938 firstly, and then we should come down to the daily area of support there. So with that being said, this is a great trade. The risk reward is a 1 to 3.6. A 1 to 3.6 risk reward, which is extremely good. I'm risking 30 pips for a grand total of 104. However, once we are around these zones and we take out the weekly support, perhaps I will be looking to maybe short this even further, all the way potentially down to our monthly, but we'll cross that bridge when it comes to it. All I'm after right now is one more swing. Swing, retracement, swing. So it's A, B, C retracement at 61.8. You guys know the importance of the 61.8 fib, and keeping it very clean, very precise and concise. So 1 hour 16 minutes, we're going to get the close of the 4-hour candle. Currently it's a shooting star, and currently we have a 3-pin formation, 1, 2 and 3, and looks to me as this candle is potentially going to form an evening star as well. As you can see there, that was the tap on the 61.8 and so forth. So that's the trade. Okay, I'm entered the trade now. I'm in. One more thing as well, guys. We have a breach above the prior day's high right there. Breach above the prior day's high. Just waiting for that to dip back below now. So I'm in the trade, risking 30 pips for a grand total of, let's say, 100. And yeah, that's that. So let's catch back up soon to see how this one played out. Hey traders, I'm back on the EURUSD. As you can see, successful trade. Now just a quick recap. We took the C retracement on the 61.8 over here. Okay, we followed the rules. 20 pips above the highs, so we took 26, added 20, well it's 15 to 30, but I personally like 20 at times, depending on what time frame we're on. This was the hourly. Okay, this was either an hour or a 2-hour short setup. It didn't really matter which one you're on. So 46 just here, as you can see, that was our stop, so it was around 31 pips. Entry around 16s, and our target was the daily support, which was just above the the Fibonacci D extension 2. Okay, so we went for the D2 due to the confluence it had with, okay, the daily support there. So this is a 105 pip trade. Now what actually happened here, we did come into profit nicely. We consolidated for a while. We dropping. As you can see, look at the support that we found at the Fib B, where this area of support was over here. Spike, came back up, came down to test the daily lows after that day once more, and then boom, look at that huge spike, that huge candle there. What actually happened there, pull up the calendar, we had the ECB press conference last week. And again, I've already mentioned on various videos and some of the manipulation topics I've covered that the market will push the price often the opposite way to the overall trend. Now, we did figure out that the trend on the euro was down at the time, and it still is down. I'm expecting further decline on this, but you can see this here, we went from 75s all the way up to 40s, so we did a 75 pip run on there. Alright, so a 65 pip run, sorry, on this one candlestick, this hourly candle. We spiked all the way up off the ECB. We spiked to the 78.6. As you can see, nearly got stopped out, 6 pips away from stop loss. And then we closed all the way back down. We broke through the weekly support there, made new lows, and then we just declined and smashed straight for our target. And we're continuing to see decline on this pair now. So as you can see here, look how the market pushed above the daily high there, this level, the previous day's high, pushed all the way above it. Again, stop losses, this is what the market does. It's the manipulation factor there has come through on the back end of the ECB, which we already know is just a load of junk at the end of the day. Ensured it's taken out the highs of where our entry was, actually the lower swing high there, to get any stops above there. But you know, we put our stop, give it that breathing room. Give the stop the breathing room. That's why I always say 15 to 30 pips, and then boom. So we're in profit for a while. Seen some drawdown for, I don't know, must have been less than a minute, and then the market actually declined in the favor of the actual trade. So decent trade there, 106 pips on the Euro USD. So that's another profitable trade in the bag. I hope you learned something from that one. If you were watching this and you were actually short, then yeah, you would have got a little bit scared around this zone. But yeah, again, 78.6 there, held pretty well on the Fibonacci as well. So successful trade, 104, 105 pips.